According to Cathie Wood, they estimate that the $400,000 mark will be reached sometime between 2026 and 2030. When she made that claim last week at Bitcoin 2022, she didn't think anyone believed her. Welcome to the Investing Wise Academy, a channel where aspiring millionaires and billionaires can learn how to invest wisely. In this video, we're going to talk about Cathie Wood's advice on how to become a millionaire. If you're new to our channel, please subscribe to see more videos like this. Let's get started. In the financial industry, Cathie Wood is notorious for outlandish, out-of-this-world price forecasts. Once again, she's devised a foolproof plan to multiply $3,650 into $100,000 and then $36,000 into $1 million with minimal effort on her part. A buyer's only requirement is the ability to hold Bitcoin for a period of at least 4 years and no more than 8 years. An initial investment of $3,650 will grow to $100,000 in 20 years, while an outlay of $36,500 will generate $1 million in wealth. Cathie Wood believes that the current price of Bitcoin is the best chance to buy in at low price before a massive bull run begins because the cryptocurrency is consolidating. Using a dollar cost averaging strategy, investors can buy dips by allocating small sums of money, say $100 to $200 over time, like her $5,000 Tesla stock price prediction. If her $1 million Bitcoin price prediction comes true, many regular Americans will suddenly find themselves millionaires. Cathie's forecasts seem plausible, as Bitcoin is gaining popularity and an increasing number of businesses are beginning to accept it as payment and provide savings and investment plans in Bitcoin as part of their offerings. If you want to know how she plans to turn $36,500 into $1 million, you'll have to listen carefully to her strategy and reasoning.
Okay, so you're assuming that institutional investors become huge holders of Bitcoin. No, we're not. We're assuming, though, that they will move in gradually, and by the time we hit $1 million plus, they will have a 2.5% exposure to Bitcoin. Now, this is such a big idea, and that is such a small allocation.
Yeah.
I think they will regret not having more because, as I mentioned, this is the first, each word I'm about to say is really important. The first global, big idea, private, meaning not overseen by any government, digital, rules-based monetary system.
According to Cathie, the first truly global, game-changing idea, a digital currency governed by a set of rules and not by any central authority. It's a fairly substantial concept. This is what she's been looking for, a rules-based monetary policy. Her mentor, Art Laffer, said when they presented their first white paper on Bitcoin in 2015, "It may not be the right rule, but it's a step in the right direction. That it is mathematically capped at 21 million units is, of course, what he means when he says it is a great way to save money." With the advent of the Lightning Network, however, we anticipate that Bitcoin will gradually expand its role as a medium of exchange and unit of account, thereby fulfilling all three functions traditionally associated with fiat currencies, according to Cathie. She also said that she remembered asking Art, who was working with her, and Chris Bernisk, another of our analysts.
I remember saying, "Art, how big could this be? This is amazing." And he said, "Well, how big is the US monetary base?"
At the time, Bitcoin's market cap was $6 million compared to $4.5 trillion total. The current value is $800 million. He responded, "Well, 4.5 trillion. This figure is currently 9 trillion. Consequently, this is a tremendous thought." As a part of utility ecosystems, Bitcoin mining will hasten the transition to renewable energy, and the genomic revolution will help us grow food in places where the environment isn't as conducive to agriculture, perhaps elsewhere than Ukraine given the current situation there. Innovation, then, is a means to an end. It's the only thing we do. Inflation is yet another difficulty in a world already plagued by many issues. We don't anticipate it lasting very long. But if it is, and if a lack of workers is to blame, then Cathie thinks you'd be surprised. Taking into account the first quarter's waterfall performance, according to Cathie, they have significantly outperformed the Nasdaq and the S&P over the last 5 years. The 5-year horizon includes not only a retrospective assessment, but also an anticipatory one. These recent performance can be put into context by looking at their flagship strategy's nearly 360% gain during COVID, or from April when the market bottomed through February 21. A drop of 60 percentage points from their all-time high is a significant challenge, according to Cathie. She had been reflecting on her clients, and she had to say that she's very grateful. They have stayed with us for the most part. Their net income was $17 billion last year. Since most of that was held off until the beginning of the year, they have borne the brunt of this decline.
We inflowed last year, and we're inflowing this year. I think that has been shocking to a lot of our counterparts out there who have gone through periods like we've just experienced and have had massive outflows. And I think a few things are at work. Number one, our long-term time horizon is practically the first thing we say when we're talking to prospective investors. Number two, if I were to have told you in February or talked to you in February of 21, even at that point in time, given our projections for the next 5 years, we expected our flagship strategy to deliver a 15% compound annual rate of return.
Given the rapid progress being made in the fields of artificial intelligence and scientific discovery, our predictions for the future have increased and are now roughly double the market's current long-term value. As a result of this price drop, we now have higher expectations for future returns. In light of this, we have high hopes for today. Now think about the origin. These findings are based on research, and these predictions are based on our experience, but we could be wrong about both. However, at the compounding rate, the percentage has increased to 50% from 15% in February. That's because the market doesn't appreciate that we've reached the optimal point for exponential growth curves, which is what we believe has happened. The majority of shoppers only think in straight lines. Over the course of our careers, we've seen mostly linear growth, which is growth that gradually slows down and decays to the rate of nominal GDP growth. We can point to Amazon as one very large example of our exposure to exponential growth. Cathie mentioned that they asked investors, would you buy Amazon if you expected it to grow at a rate of 20 to 30% annually over the next 20 years? When we made our 03 investment in the company, if you were to plug those numbers into a dividend discount model, you'd buy that stock in a heartbeat. Yet, that was not what most people believed. In a sense, you need to retrain investors. This is something you need to talk about and do as you talk. Investors have learned over the past 2 decades to anticipate that spike in hopes of quick profits. When there is potential for immediate discomfort, how do you reorient their attention to the future? Now she believes the market will gradually educate them. You're correct that the market has beaten the returns of the vast majority of active investors over the past 20 years. Many people's futures are at stake there, since the markets and broad-based indices have been advantageous places to be. There has been a lot of benchmark hugging recently. If ARK was right about the extent to which disruptive innovation will upend the established order, then the broad-based norms aren't where you want to be. They are now guaranteed to always be reliable. Some stocks, thanks to their strong management, will be able to withstand the effects of the disruptive innovation we're witnessing. However, many companies included in the broad-based benchmarks have become accustomed to pumping up investors with artificial earnings, share repurchases, and dividend increases. They've taken on debt to fund this, and they haven't put nearly enough money into research and development. Regarding the sort of progress in which one can expect to take part, we are in a lot of winner-take-most opportunities because of artificial intelligence. So businesses must forgo short-term profits and invest aggressively in order to keep up with the pace of innovation we foresee. Therefore, if we are correct, you can find this idea among our grand plans for the website at some time between now and 2030. The current market cap of $10 trillion represents less than 10% of the market. But by 2030, the market cap associated with truly disruptive innovation is expected to rise to $210 trillion. What a difference 8 years can make. That's all for today. What are your thoughts on this advice? Do you think Cathie is right? Join the conversation in the comments section below. Please click the like and subscribe buttons if you enjoyed the video. We'll see you in the next one.